Catro Music and Graphics corporate decoder channel logo with a glitching analytical effect. Tom Ray, everyone, welcome back to Corporate Decoder, the place where we dissect the financial world to bring you the unvarnished truth. So H&R Block just dropped their annual report, and let's just say it's a tax season wrap-up with a side of corporate strategy that makes you wonder if they're already planning next year's filing while still counting this year's money. Alright, let's dive into what H&R Block has been up to for the fiscal year ending June 30, 2025. They're basically the tax prep giants that help millions get their taxes sorted, but how are they doing behind the scenes? First up, revenues. They pulled in a cool $3.76 billion. That's up 4.2% from the previous year. Sounds good, right? But dig in a little deeper. The big driver here is their US assisted tax preparation. That segment alone grew 6.1%. Think about it, more people are walking into their offices or using their virtual services. This means their core business is still strong. Now royalties, that's how much their franchisees pay them. That number actually dropped 5.8%. This is interesting. It looks like H&R Block has been buying back some of their own franchises. So instead of getting royalty payments, they're now collecting all the revenue themselves from those locations. It's a strategic move to gain more control and probably keep more of the profit directly. Then there's Wave, their small business solution. That arm is growing too, jumping 13.2%. So H&R Block isn't just about individual taxes anymore, they're pushing into helping small businesses thrive too. Now, let's talk about what it costs to make all this happen. Total operating expenses went up 4.6% to about $2.9 billion. A big chunk of that is compensation and benefits, which makes sense. They saw increases in field wages and other wages, probably to attract and keep good tax professionals and corporate staff. Marketing and advertising spend also edged up slightly. They're trying to get the word out there for all their services. Here's a number you might like though. Bad debt expense actually went down 18.5%. This is likely because they're originating fewer Emerald Advance loans. Fewer loans mean fewer people defaulting, which is good for the bottom line, but might mean less revenue from those specific products. When you crunch all the numbers, net income from continuing operations landed at about $609 million. That's a small increase of 1.9% from the prior year. It's not massive growth, but it's still a solid profit. And the earnings per share figure, which is basically how much they earn for each share of stock, came in at $442. That's up 6.8%. So for shareholders, that's a positive sign. They also report something called EBITDA, which is a measure of their operating performance before interest, taxes, depreciation, and amortization. That was $976 million, up a bit from last year. This shows their core business operations are generating healthy cash flow. Looking at how they're giving money back to shareholders, they repurchased about 6.5 million shares of their own stock. Plus, they paid out dividends, increasing them by about 17% per share year over year. This shows they're focused on returning value to investors. Now let's talk about their financial muscle. H&R Block has a credit line, a big one, for $1.5 billion. They're looking good here because as of June 30, 2025, they had no balance outstanding on this credit line. This means they have tons of flexibility to borrow if they need it. When companies buy other businesses, they sometimes record something called goodwill. It's like an accounting value for the extra price they paid over the fair value of the assets they bought. H&R Block has about $802 million of goodwill on its books. The largest chunk of this, $59 million of goodwill on its books. The largest chunk of this, $59 million, is tied to their Wave reporting unit, which is their small business segment. They tested it for impairment, and thankfully the value seemed to hold up. They also have a lot of intangible assets, which are things like customer relationships and reacquired franchise rights. These add up to about $259 million. A big chunk of this, over $172 million, is for reacquired franchise rights. This really highlights their strategy of buying back franchises and bringing them under direct H&R Block control. Now here's where it gets a bit more serious. Every company has risks, and H&R Block is no exception. They've got a whole section dedicated to them. One of their big concerns is changes in tax laws. If governments make tax filing simpler or even do it themselves, it could hurt their business. Think about it, if the IRS offered a do-it-for-you service for free, why would you pay H&R Block for the same thing? That ties into another big risk: increased competition. They're up against everyone from other big tax firms to DIY software to even the government offering free tax services. They worry that if they're slow to adapt or if competitors offer better products or prices faster, they could lose market share. They also mention a significant risk around fraud. With so much personal and financial data, they're a target. While they have security in place, they admit that sophisticated fraudsters can sometimes get around it, even without a direct breach of their systems. This is a constant battle and a crucial one for maintaining customer trust. And speaking of trust, cybersecurity is a massive deal for them. They highlight the complexity of data privacy laws and the constant threat of breaches. They're investing in security, but also stress that absolute security is impossible. A breach could really hurt their reputation and financials. Then there are the legal and regulatory risks. H&R Block operates in a heavily regulated industry. New laws or new interpretations of old laws can pop up and force them to change how they do business or even stop offering certain products. They specifically mention ongoing government inquiries related to their IRS Free File program and other DIY tax services. This is a hot area and could lead to fines or changes in how they operate. Looking at the actual financial performance for fiscal year 2025 compared to 2024, we see that revenue increased by about $150 million. That's a solid 4.2% bump. But as we talked about, assisted tax preparation was the star, growing over 6%. Their DI business also saw a nice boost of nearly 10%. On the expense side, things like field wages and benefits went up. This is likely due to keeping up with inflation and investing in their people, especially for those crucial tax season workers, and back to their cash. As of June 30, 2025, they had nearly $1 billion in cash and cash equivalents. They're not really using their big credit line, which is a sign of financial health. They bought back over 6.5 million shares of stock this year. That's a significant amount, showing a commitment to reducing the number of shares out there and potentially boosting the value of the remaining ones. Now, they do have some ongoing legal matters. They accrue for probable losses, and they say that for most of these, the potential financial impact that they can estimate is not material. But they also caution that actual outcomes can be quite different, and sometimes it's hard to predict those losses until much later. So what's the story here? H&R Block is a resilient company. Their core assisted tax services are strong and they're smartly investing in their small business segment with Wave. They're also managing their finances well with plenty of cash and a solid credit line. The big challenges for them are staying competitive in a changing tax landscape, managing those ever-present cybersecurity risks, and navigating the complex web of regulations. They're also actively returning capital to shareholders through buybacks and dividends, which is always a good sign for investors. They seem to be doing a good job of balancing growth with risk management. The fact that they're buying back franchises shows they're making calculated moves to strengthen their direct operations. Alright, that's our deep dive into H&R Block's 2025 annual report. What do you think about their strategy and their financial health? Let us know in the comments below. If you found this breakdown useful, give this video a thumbs up and subscribe for more corporate financial insights. And hey, if you want to connect with like-minded finance enthusiasts and get exclusive content, join our Discord community linked in the description. Thanks for watching, and we'll see you in the next one. Row Music and Graphics Corporate Decoder channel logo fades in and out with links to subscribe and join Discord.